Good morning, Lions. It's Ryan Lyon here from Lion DAO, and today I'm coming at you with an update on Liquidity Alliance, Astro Wars, how those two things kind of play into each other to create this positive feedback loop, as well as treasury growth strategies. Yeah, lots to cover since our last video. As you should be aware by now, there's this ongoing Terra Liquidity Alliance where I think about 20% of chain inflation has been rerouted from staking rewards into this Liquidity Alliance product, which is fronted on Eris protocol, uh, with the aim to bring more liquidity and hence more on-chain activity to the Terra chain, and the rewards for Liquidity Alliance are ramping up over time. And Lion DAO are very much at the forefront of Liquidity Alliance in many different ways. Our pairs are listed there. We've got voting power. We're building liquidity. We're building the treasury, using a lot of different strategies when it comes to Liquidity Alliance. So where are we at? So here's the dashboard on the screen, the Lion DAO treasury dashboard, and as you can see here, we have nearly $123,000 in liquidity on Liquidity Alliance. The total amount of liquidity that's been attracted so far is 3.25 million. This has grown significantly since our first update. This was at around 700k, so it's grown by 4.5x over the last several weeks. And these rewards that you see, the annual rewards in Luna, are growing every week as the amount of rewards that are allocated to Liquidity Alliance ramp up over time. And this number, probably we're about halfway there now, I think. So the annual chain inflation is in the 70 to 80 million Luna range. So 20% of that is 14 to 16 million Luna, and the price of Luna is at like close to 40 cents right now. So 40 cents times 14 million, somewhere in the region of 5.6 million. So maybe not even halfway to the amount of rewards that are going to be awarded to Liquidity Alliance. And obviously, we're in the midst of what looks like a potential bull market. We're seeing all-time highs for Bitcoin, which is always leading the cycle when it comes to a bull market. And when those increases drip down to Luna, say Luna doubles from here, you're looking at an annual rewards of 10 million, which is going to make this is either going to be massively beneficial for liquidity providers, or it's going to bring a lot more liquidity and on-chain activity to Terra. So lots of potential wins using Liquidity Alliance. We absolutely love it as a strategy. As you can see, we have a large amount of liquidity in Liquidity Alliance split across a lot of different pairs. So we're currently at $123,000 of liquidity. How's that split up? Well, you can see here I've got all our liquidity positions ranked in order, and you see the vast majority of these, if you see the number in orange, that means that we've got auto compounding turned on for that pair. So that means that any Luna rewards that are received for these pairs are automatically reinvested into building a larger liquidity or LP position. So we're using the rewards to grow our treasury. The only one that we don't have auto compounding turned on for is the raw AMP raw pair, because we want to be generating some liquid Luna that we can utilize for other strategies, whether that be pairing against other tokens that we've still got in our treasury, whether that be adding rewards to our DAO stakers, or whether that be using them to buy other tokens such as Astro, which we'll talk about in a little bit. So, what are we providing liquidity for? Our biggest position is the raw AMP raw pair. So this is essentially replaced AMP raw as a chain alliance asset. There was a lot of concern. Okay, when that retired, well, what does the replacement look like? Well, it's around about the same APR. These are the kind of APRs that we were seeing for single-sided staking on chain with rewards in Luna. This has now been converted to raw AMP raw. And is probably providing more value to the chain than just a single-sided staking token, and the rewards are around the same. So this has been a great transition for us. You can see here this pair has the third largest amount of liquidity on it of all the pairs, and I don't know how many pairs are here, probably 30 to 40 pairs. So it's doing extremely well. There's got a lot of community engagement. There's a lot of raw holders in the Terra community, and they're using their raw to provide liquidity and rewards, and that's what you love to see. You love to see Luna going to active participants on the network rather than just necessarily to whale stakers who are selling off those rewards. So that's our biggest pair. And we're generating Luna here. I think we're generating something in the region of maybe a couple of hundred Luna a day. We could probably do the maths on this. $30,000 at 54% APR. So that's about $15,000, maybe $16,000 annually just on this pair in rewards. And 365 days, so maybe about $50 a day. So maybe 150 Luna-ish a day just on this pair that we can then use for other means. Second biggest position is our stablecoin position, so it's USDC USDT pair, which is compounding at 21% a year, which is great. Building our stablecoin position up. We're then providing Luna Raw liquidity, and by having auto compound turned on this pair, this means that when we get our Luna rewards, basically 50% of those Luna rewards are used to buy back raw and put it back into this LP. So anyone who's got auto compounding turned on either AMP raw or Luna raw is actively basically putting buy pressure on the raw token. So that's been a great source of coin stability for us, buyback pressure. So big shout out to anyone who's providing liquidity here and has auto compounding turned on. We've got a large position in Luna and wrap staked ETH at 42% APR. We've got Atom, most of our Atom in this Atom D-Atom pair, which is paying out, which is auto compounding at 70%. So if you think when you're staking Atom, not sure what the APR on staking Atom is now, it's probably somewhere in the region of 15 to 20%, something like that. Well, we're auto compounding at 70%, so it's like staking Atom at 70% APR. And obviously D-Atom itself is staked Atom, so you're doubling up there. You've got Luna Bone Luna, so almost 6k there, so just basically auto compounding into a bigger Luna position with one half of it itself an auto compounding token. We had to put some liquidity into Luna stablecoin pairs, so we've got some Luna USDC here, some Luna USDT here. So again, on both of these pairs, we're building a bigger Luna position, we're building a bigger stablecoin position as these are auto compounding, and we're providing value to the chain by helping create deeper liquidity on Luna pairs. You can see here, look, this pair itself has grown. I think when we first looked at this, there was maybe about 150k of liquidity on this pair. There's now, getting close to $1 million of liquidity on this pair, which is great to see. We got Luna Arb Luna. So Arb Luna, quite an interesting tool. You see here in the arbitrage page, you basically deposit Luna, and it helps keep the peg of AMP Luna and B Luna, and you earn an APR based on that. Since it's launched, it's pegged now at one ARB Luna to 1.66 Luna. So previously we haven't had anything to do with that token, just to hold it, just to hold the ARB Luna token. Now we can also provide liquidity with it and earn 45% or 55% auto compounding. So again, growing our Luna positions here and on AMP Luna as well. So that's 3 Luna and Luna LST positions that we're just growing our Luna positions on. We got Luna Atom here. I mean, 108% APR, 180% APY on this pool. So, you know, 100% APY. If you imagine, just for the sake of the argument, that Luna and Atom stay at exactly the same price for a year, if you put, let's say, $4,000 of liquidity in here, by the end of the year, you would have over $10,000 of liquidity in here. So that's a huge growth option for us. We got a little bit of Bitcoin, so we got a Bitcoin pair with auto compounding switched on. So again, we'll almost double the amount of Bitcoin that we've got in this pool if everything remains the same over the course of a year. We've got some Luna injective liquidity. Not a lot. We've got I think about something in the region of about 6,000 injective dollars worth of injective tokens. So it's been nice to utilize those to provide liquidity here. Another Luna ARB Luna pair, a Luna Wrap Sol pair. So this is some Wrap Sol that we've been providing liquidity with on Terra for quite a while, but again, 167% APY. And then we've got some whale LSD pairs, a little bit of Luna Bitcoin, and then just some scraps down here. So you can see we're providing liquidity on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 20, 19 pairs, 19, 20 pairs we're providing liquidity on in Liquidity Alliance at an average APR of almost 50%. So again, all things remaining equal, let's just say all these tokens remain the same price over the next 12 months. This liquidity position will increase from $122,000 to around about $180,000 through auto compounding and rewards. So it's a great strategy for us to be able to utilize our treasury to provide value to the Terra chain, to grow our treasury and to put our treasury to good use. Over the last, was it 20 months since we launched, we've been diversifying our portfolio. So we've been doing a lot of OTC swaps, so swapping raw for other tokens, and that's put us in a great position to be able to utilize the Liquidity Alliance, because we own a lot of the tokens that are available for Liquidity Alliance. It enables us to have a kind of broad strategy when it comes to Liquidity Alliance, rather than having all our eggs in one basket. And I guess the benefit to the chain here as well is that I thought I had the page open. The Phoenix, so the chain itself and the Phoenix directive, if we go and look at their DAO page, so all these liquidity pairs have if you hover over here, you can see they've got a 10% take rate. So basically you're giving up 10% of your liquidity position to the chain over a 12-month period. That's obviously, for all these that are auto compounding, we're negating that, because we're growing, we're getting much more rewards than we are giving away. So these guys, this is where I had it. So I had their pulsar. So you can see that they've racked up $21,500 of chain-owned liquidity already. The biggest one of those is Luna USDC. You see, there's 1.3k of raw Luna LP and a few $100s of raw AMP raw LP. And I guess the idea here is that, ideally and hopefully, this isn't going to be touched. So this is liquidity that's owned by the chain, that's essentially going to remain there in perpetuity. So it's like perpetual liquidity that's going to be owned by the Terra chain. So if everyone pulls out their liquidity from the raw pair, there's always going to be some chain-owned liquidity that's going to sit here and forever provide liquidity to that pair, and that's going to be owned by the chain. The idea is, I guess, this portfolio ramps up over time, and we're here in maybe 12 months time, and there's maybe 7 figures of liquidity that's chain owned, which just brings perpetual liquidity to the chain, and everything that sits on top of that is kind of a bonus, right? So that's kind of where we are, what our strategy is, how much liquidity we're providing, how much we're earning, and how that benefits both the chain and the treasury. I think if I move over here to the vote screen, so we have, you can see here that we've got, I'm just going to claim the rebase here. Oh, no, that's not working. I'll deal with that in a bit. So you can see we've got nearly 35k Luna locked up for vote power. We've got 350k vote power out of a total of 6.85 million vote power. So we're still sitting around that 5% vote power region. This number has increased significantly. I think at one point, I think when I did my first video on this, we were at about 2 million vote power, and we had 7-8% of that. So we've been trying to keep up with that. We've made a few extra locks. You can see the locks that we've got here. We've got a lot of AMP Luna locked up, and we actually bought this 1000 Luna lock at a discount from someone who didn't want it. So if there's anyone who's got locks that are locked for 2 years and they want to get out of them, we'd be open to making an offer to buy those at a discount to continue to increase our vote power. But we're pretty happy around that 5% mark. It feels about right. And then we've been consistently voting on pairs that are providing incentives, so that we're growing our treasury that way as well. And I think I've done a few posts on this where we're actually earning close to 100% APR on that 35,000 Luna locked up in just vote incentives. So interesting this month that this Luna USDC pair on Astroport has historically been kicking out a lot of rewards, but since Astro Wars started, Luna USDC is going to receive less Astro rewards. So we're probably going to split our vote between between White Whale and Astroport pair this month for the first time, to pick up some whale as well in bribes. You can say here, so if we vote for this pair as it stands this month, we'll get 11-12% APR just on that one vote. You see here the Luna Raw Astroport LP, which has got the biggest amount of rewards of any pair on it, and that's 40%. So you'd have 40% plus 12% here. So that's what, 53% APR, and then there's a nice chunk of rewards that are coming into USDC, USDT on Astroport. So another 25% there. So you're close to 80% APR there already just from voting, and a lot of that is in Astro. And I guess that's the next thing that I wanted to talk about, is this is this Astro Wars loop, Astro Wars to Liquidity Alliance loop that we've got going on. So if we move to Astroport, if you haven't been paying attention, Astro have moved from a governance, like a central governance model, to what they're calling VX Astro, and Astro Wars, where you can now use your Astro to vote for which liquidity pairs you want to see Astro rewards sent to. And we entered this last. So every epoch here is 2 weeks. There's a vote every 2 weeks on where to send Astro to. And you see that the Lunar Roar pair received 15.6k or 15.7k Astro over a 2-week period. And this was up massively. So this number before, I think, was about 6,000. So we basically 2.5x'd through Astro Wars the amount of Astro that's being directed to our pair, which is great. It means we've got Astro rewards on our pair at 10% APR. It's quite a low APR for a high amount of Astro, because we've got a large amount of liquidity on this pair, nearly closing in on somewhere between $150,000 and $200,000 liquidity here. And by having more Astro on our Lunar Roar pair, it incentivizes more people to vote for us in Liquidity Alliance. And you say, well, why is that? So if I go back here, so you see that it's down to $150,000 of liquidity. So you see here, there's $150,000 of liquidity in total on Astroport, and $132,000 of that is locked in Liquidity Alliance. So that is what, 90%, something in that region, of our total liquidity is in Liquidity Alliance, earning 30% APR in Luna, right? So, and if we look at this same pool on Astroport, there we go, Raw Luna. So this is earning 18% APR on Astroport, and it's earning 30% APR on Liquidity Alliance. So if you're a Raw Luna liquidity provider, you're saying, well, the obvious thing to do is to provide it here, because I'm getting, 50% more rewards by putting it here. But when you put it here, you forfeit your Astro rewards that you would get from putting it here. And what happens to those Astro rewards? Well, those Astro rewards go to bribes. So that's why we've got such a high number here on our bribes, is we're providing bribes in Raw. Some random person has provided bribes in Kappa, a Kappa token, which is very good, and thank you very much to whoever did that. I've got genuinely no idea who did that. And then the third bribe that we're getting is Astro, and you can see there's 4,100 Astro already on this pool. What happens is, because this Astro here is drip fed as incentives, it drips into this pool. So at the start of the week, you'll see no Astro bribes here, and then when voting closes on a midnight or late night on Sunday, this number will be close to 7,500 Astro, whereas before it would have been maybe 2,000 to 3,000 Astro. So we're getting 2.5 times the amount of bribes. And well, what does the bribes mean? Well, it means if you've got voting power, who are you going to vote for? You might have a vested interest, so you might want to vote for. You might be White Whale, and you might want to vote for White Whale pairs. You might be Catapult, you might want to vote for solid pairs, but you might just want to get the most amount of bribes that you can for voting for a pair. And because we've got by far the highest amount of incentives, 3 times the amount of the second one, so we're getting 27.6 99.7% of the vote, and I'd expect when people come round at the end of the week to vote for this, this is going to be more like $700 maybe in bribes. And you know, if you're a neutral voter, you're probably going to vote for that. So I expect probably we might even breach 30% of the vote on this pair. And what does more vote mean? More votes means more rewards on this pair. So you see we're getting $50,000 rewards from 27-ish% of the vote. And if the vote goes up, the rewards go up. So more rewards, higher APR, more liquidity, more people incentivized to vote for it, more people incentivized to vote for raw Luna on Astroport governance, and it creates this positive feedback loop of this kind of dual incentive model where the Astro rewards are basically being used to bribe voters on Liquidity Alliance to vote for raw Luna, which then increases the amount of Luna that's allocated to our pool as rewards. So it's just this kind of like loop of positive feedback. So hopefully we can keep both these things going. A decent percentage of votes on Astro Wars, and then that translates to a good percentage of votes on Liquidity Alliance, which that means that both pairs are, you know, there's heavy cross incentives to keep building that up, which means more liquidity, more buy pressure, more attractive to hold the raw token. And this whole time we'll be, you know, continuing to build liquidity on our pairs across Liquidity Alliance and build our treasury. So just wanted to kind of like put that into context for people who maybe haven't thought too much about how this cycle kind of loops around. And then we'll also take a percentage, you know, as I said, we take a percentage of our Liquidity Alliance rewards and we put them into Lion DAO. We're emitting about 50 Luna a day as rewards to stakers on the DAO, as well as raw, about 50 million raw. So we still got 26% of the total token supply locked up here. So it's 26% staked. You've got, I think, about 350 billion in the treasury. So that's almost 60% between staked in the DAO and locked in the treasury. We've got about 60 billion in the operations wallet, so that takes you up to 66%. Then we've got, what will this be, about 120 billion in this pair, and about 65 billion in this pair. So like you can see that these flywheels of having DAO rewards for people who just want a single-sided stake, having rewards on our liquidity pairs, having a large amount of tokens owned by the DAO still, very quickly starts to eat up the circulating supply of raw, and as it becomes more and more attractive to use as a token to earn yield, hopefully that, you know, then ultimately results in more and more buy pressure on the token, and the token becoming a lot more attractive for people to own. So that's Liquidity Alliance, Astro Wars, and staking. A very quick view of the treasury. This is not something that I show very often, but you can see here this was updated a few. Oh, this is out of date. Sorry, this was updated a few days ago. I spent a long time putting this together. You can see that our total treasury value is in the region of closing in on $200,000, and as a token that's got about $1 million market cap means our backing, our market cap to treasury ratio is about 5, which is pretty good, right? If our market cap plummets for whatever reason, there becomes an incentive for people to buy because if the treasury is higher value than the token market cap, then you could potentially buy the token and look to liquidate the treasury and make a profit, right? Ultimately, so this is a very healthy, it's a very healthy ratio. It's on the low side as it's been historically. I think it's the lowest it's ever been is something like 4. The highest it's been, we had a few random pumps of the token over time, so it's been in the 20 range, I think, before. So this is really on the low side, and you can see that we calculate the circulating supply of raw of about 451 billion. The rest of it is owned by the DAO essentially. And what does that look like in terms of, we said about having a diverse treasury. So what does that look like? You can see here we've just been keeping track of what are our holdings. You see it's a nice diverse range of holdings. Obviously the majority of it being in Luna. Oh, not even the biggest portion of the pie being in Luna. About 17% in stables, which is nice because stables aren't subject to fluctuation. Got a nice chunk of Atom, ETH, Whale, Kuji, Injective, NFTs. Our Astro bag is growing. We've got this is out of order. So we've got 5% in Neutron. We've got a cash token. We've got Bitcoin. We've got Osmosis. So a real range of tokens and assets in the treasury, which hopefully, as we come into this bull market and alts pick up, we'll see a big spike in the treasury value, which will hopefully put a spike in the market cap, if that's what you're interested in. And I think there's probably 2 measures to think about fair value of the token. So you got the treasury to market cap ratio, which, as I say, is a very healthy range right now, on the low side. But then you also think about like income for the token, right? So if you look at the raw token here, so income for the token, so you've got, I guess there's 3 metrics because there's also liquidity as well. But if you think about, we've got $160,000 of income on this pair alone. We got $51,000 or $52,000 of income on this pair, so that's $212,000 of income. There's another raw Luna pair, so that's another 5K, $217,000 of income. Then you've got the Astro income, which you would say, what's this? So let's just call this 15,000 at about 4 cents, like 52. So you've got another $30,000 of income here. So you're talking about $250,000 of non-inflationary income coming to a $1 million market cap token, which to me is pretty crazy. Usually, maybe you'd get a 25% APR on a token, but it would be mostly in inflationary rewards, right? And then that also doesn't take into account our validator income, which has been fluctuating a lot recently. But you're talking probably a few $1,000s of Luna, a few thousand Luna a month of income there. Let's call it another 10K. So lots and lots of income streams here for the token, for a relatively low market cap token that's not coming from an inflationary supply of our own token. So really, really positive metric. And then let's think about the liquidity. So you've got $150,000 of liquidity here on Luna Raw. You've got another let's call it 40,000 here, so that's $190,000 of liquidity. If I jump to CoinHole, and if we look at the raw token, there is also raw whale, so another $20,000 of liquidity here. So you're at $210,000. You got raw Osmo. Raw Osmo, another 26,000. So we're at what, $240,000 liquidity, and then finally you got raw Neutron, which is a new pool that we created, which has got $16,000 of liquidity against it. So you're looking at over in excess of $250,000 of paired liquidity, again on a on a less than $1 million market cap token, and that's not even taking into account raw AMP Raw, which is another $250,000. So you're talking about $500,000 of liquidity on a less than $1 million market cap token. I don't know if there's another token in existence that has those kind of ratios of P2E, of market cap to treasury, of liquidity to market cap. So we've been building towards this, and of having like really healthy metrics for the token, income for the treasury, continuing to build the treasury, and all those plans are starting to come together now with Liquidity Alliance and with Astro Wars, and with the validator operation. And we've also got the Prism validator, and Prism are about 2 months away from their genesis, so hopefully that'll be another income stream for the DAO. Just trying to look here. I've also got Nucleus Council open here. This is another strategy that we've been using to get votes on Astro, and you can see at the last epoch, Raw Luna got 25% of the vote here. These guys own about 100,000 Astro, so another nice boost to our Astro Wars. So I think that's everything that I wanted to cover today. Some really, really nice flywheels here. Hope that it's been insightful, an insightful chat, and as always, I've gone way over schedule. But if anyone has watched this far, thank you very much for watching, and I'll catch you on the next one.